Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel. I hope you're having a fantastic day wherever you are in the world. Let's dive into today's video update where we're going to be talking about the Bitcoin correction and what's going on at this time, at this very moment, because this is a chart from yesterday's price action and you can see that the approximately 97-day technical uptrend saw a rebound of 6% yesterday. And previous rebounds have been 33% and 43% respectively. So the question was yesterday, is this technical uptrend line weakening over time? And it was just too early to say that 6%, it was just too early to say. We needed to give it a bit more time. So we did give it a bit more time, and look at how pitiful this rebound from the technical uptrend actually was. 6%. Compared to the last time we saw that rebound, 43%. So clearly it looks like this technical uptrend line may be in danger and we might be breaking down from here. And this is today's price action, and you can see that we're pretty much breaking down from it. It hasn't cleanly fully broken down from the technical uptrend, but we might as well just say goodbye to it. We might as well expect some additional downside. It looks like the 97-day technical uptrend is in trouble. It looks like the technical uptrend is over. So let's focus on how this technical uptrend could break down and what this could mean for Bitcoin's price action going forward, because this is now a 35% retrace, which has been going on since around mid-April. So it's been a month-long retrace, 34 days, 35% deep, and we just have to talk about how this retrace compares to previous bull market retracements, because of course people are going to be talking about this being the beginning of a bear market. A little bit too soon to say things like that, but we have to focus on 2017 for a second, because right over here, minus 30% to minus 40% is what we tend to see in healthy bull market retracement periods. This has been the case in 2017, and you can see how 35% falls into that bracket of normal historically recurring price tendencies in Bitcoin's price action, especially since in January right over here, this was a 31% retracement. And this is a 35% retracement. So that's only minus 4% deeper than what we saw in January. So not too different to what we're accustomed to in 2021. But yet people are still losing their minds. A little bit prematurely. Nothing has been confirmed yet. At the moment, everything feels like it's in a bull market still. But not only about the depth of the retracement periods, we also have to look at the amount of days these retracement periods tend to go on. And in 2017, you saw them going on for a week, 3 weeks, 4 weeks, just over 2 weeks, only a few days, and 2 weeks again. So roughly speaking, on average, 16 days is what a bull market retracement period tends to go on for. But of course, this is now a 34-day retracement period in this current pullback. So is that really such an outlier in terms of what we tend to see in 2017? Well, you can actually see that the correction in 2017 was also 34 days. And what's interesting about this is that not only was this a 34%, or at least a 34-day retrace, but it was also one of the deeper retracement periods, right? So this is a 39% retrace in 2017, deeper than what we saw before. Right over here, 40% retrace, 30%. So this is the deepest retracement period that we saw in 2017. And at the moment, this is also the deepest retracement period that we've seen in 2021. But not only the deepest, it's also the longest in 2021, but also in 2017 as well, where we saw a 34-day retracement period. So the longest, the deepest of the retracements tend to occur at around this period of time. So not only is it the longest retracement, not only is it the deepest retracement across 2017 and 2021, but also the situational context of this retracement is quite curious. near the end of Q2 in 2017. Now we're also in mid Q2 as well. So it seems like it's a very similar contextual period where we're seeing a retrace. So it's not just the amount of days, it's not just the depth of this retracement period, but it's also the situational, the context, where we tend to see a deep retracement in Q2 near the end of it, or around the midpoint of that Q2. Really interesting to see this sort of situation develop where we're seeing a mirroring between 2017 and 2021. So now that we're breaking that technical uptrend, of course, it isn't a clean breakdown just yet. But what we should be focusing on in preparation for that clean breakout to actually occur and materialize and crystallize itself over the coming hours and days, this is now the most important support to watch out for. This is where we tend to see some reaction. And of course, we're not seeing that reaction at the moment. We tend to see long downside wicks from the support. And we're seeing these long downside wicks happen here as well. And actually, we're seeing that long downside wick go to levels we haven't seen before on previous retracements into this support area. So it's interesting to see that buyers are getting chances to get those low bids filled. And we're seeing a bit more volatility here than before. But the technical uptrend hasn't cleanly broken, and this support area also hasn't cleanly broken just yet. So we're still here. A daily candle close below this support area would probably set Bitcoin up for a nice tumble to this area, roughly speaking, which is the low 40,000s, high 30,000s. But we're not at that point yet. We need to see how this reaction is going to occur. Is it going to be a strong bounce? Is it going to be a pitiful rebound? At the moment, we've only seen 2-3 green candles over the past several days of this retracement, so not much buy interest coming in at the moment. But let's see how this pivotal, crucial support area reacts and how it pushes price up from this point. We haven't broken down from here just yet, so we need to watch out for how strong this reaction will be, because in the past we've seen a 33%, 43% rally, so we need to give it a few more days still for it to give us some evidence. Is it weakening? Is it strengthening? We need to see that rebound soon. And if it's going to be a pitiful one, we might as well prepare for these lower price regions, but we shouldn't rush just yet, because we have to bear in mind that historically speaking, minus 30% to 40% is a historically recurring normal correction for Bitcoin's price action, and we're already in a 35% region, which means that the majority of this retrace, by standards of history, has already happened. The majority of this retrace has already happened by standards of history, and if we don't break down from here, then this will probably be the bottom. We can't rush to that conclusion just yet. We need to see confirmation and price strength holding here, but we need to watch that upcoming reaction. Will it be a weak one? If it is, we're going lower. Will it be a nicer one where we see strength come in and then a market structure forms? So for instance, this rebound occurs and then we see sideways flagging, rebound, and then sideways flagging again. If we see a nice rebound followed by sideways flagging, that's a positive sign. But if we see a rebound like this recent candle, where we're not really seeing much volume, not much buy interest coming in, then this support area is going to be in trouble and we're going to see lower price regions. But the most important thing to bear in mind is that Bitcoin is still in a bull market, because according to the stock to flow model, which is a long-standing valid indicator, and what I mean by valid is that it has a lot of validity when it comes to predicting bull market tops. Whenever it deviates, whenever Bitcoin's price action deviates beyond the stock to flow line, like so, we tend to see bull market tops. Well, you can see right over here that Bitcoin hasn't even deviated beyond the stock to flow line. And through the lens of the stock to flow line, what can prolong and extend a Bitcoin bull market is for Bitcoin to either extend, or at least enter an extended consolidation period, or just a retracement. And Bitcoin is doing it's doing exactly that. It's doing exactly that, where we're seeing a pullback, and that's one of the best things to prolong the Bitcoin bull market, because once we see a retracement and then a bottom on that retracement, we're probably going to challenge and break this stock to flow line right over here, which is now flattening out. So it's going to be easy to break that leveled out stock to flow line and begin it's going to begin its upside deviation once it breaks beyond that leveled out stock to flow line. And that's where we're going to have to start paying attention to a bull market peak. But it's too soon to talk about that. It's too soon to talk about a bear market right now, because we haven't even deviated beyond this stock to flow line. And having said that, guys, that's about it for today's video update. I hope you enjoyed it. Subscribe to the channel if you haven't already, and of course like the video if you'd like to see more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.